Tom Quarmby, he's head of regional banks, Asia ex-Japan at Barclays Capital. Tom, retaining an overweight recommendation on both HSBC and Standard Chartered, so you're pretty confident, I take it. But, I mean, it is Europe's a weak spot, isn't it?
Yeah, I think it'll be interesting to see the European results. Within the Global Banking and Markets division of HSBC, we know the results are going to be soft. Interest rates have stayed low. There hasn't been a whole lot of opportunity to make money there around trading the balance sheet, and so very soft. But I think if we go back even a month, the market was really worried that in addition to those weak results, we'd potentially see bad debts coming out of some of the European businesses. And that view seems to have softened quite a bit. So
why do you think that's the case?
Well, I think, we've seen a couple of measures in Europe from the ECB and including LTRO that I think have probably improved confidence a bit in the market there.
Has it worked? Was it a masterstroke by Mario Draghi?
Has it worked to improve confidence in the European banks and the European economy? Yes. Has it solved their ongoing funding problems and helped recapitalise the European banking system? No. So, there's still some work to be made. But for now, it's prevented a crisis and helped with confidence.
Tom, let's just talk a little bit more about HSBC and how the strategy there is evolving. And, the retail side is definitely not as important as it was. Yeah. But what do you make of this?
I think the focus at HSBC has gone away from product and towards geography. And so focusing on geographies that have been a traditional strength of HSBC. So we continue to see them focusing particularly in the Greater China region and through most of Asia, but then pulling away from certain products in certain markets like Japanese private banking, insurance in Iraq, consumer in Russia. So a very, very focused strategy, but I think more on geography than product. Product seems to be where it was before.
I've noticed that they haven't been calling themselves the world's local bank of late.
I think, as I say, the focus is, where are we strong? Where are we deposit funded? I mean, that's the key in this new world order of liquidity, is where you have deposits and where you can utilise that funding and that strength with customers.
Well, alongside HSBC, if we look at the share price last year, amongst the British banks, we've got the other one, Standard Chartered, which has virtually no business in Britain. I mean, nearly all its money is made in Asia. Well, the two of them, HSBC and Standard Chartered, were the best performing ones.
Yes.
What about Standard Chartered?
Look, I think Standard Chartered, obviously, because around 90% of its business comes from emerging markets, predominantly Asia, but also Middle East and Africa. And, the lack of exposure to North America and to continental Europe and the UK has certainly been a plus for that bank.
Okay, well, what about the banks in this part of the world? How well are they funded? Which are your likes and which are your dislikes?
Yeah, I think funding remains a key for Asia. We've seen European banks having to withdraw from this region, albeit quite modestly, and Asian banks stepping up to the plate. The Asian banks at the moment remain well funded, all deposit funded, not reliant on bond markets or short-term money markets, and that's certainly a strength. I think the challenge will be, though, is that we've seen very strong demand for credit in this region. The Asian economies have been doing well, and how do the Asian banks continue to fund the kind of growth we've seen? So we do see some challenges to strong growth continuing in markets like India, in markets like Indonesia, and I think in China as well. We've seen a good recovery and some good stimulus there, but the question is whether that credit growth can pick up and keep the economy going.
Tom, thank you so much for coming in. Tom Quarmby there from Barclays.